Welcome back, you legends. Dr. Cal here, and I'm going to make this very short and very sweet, so let's get right into it. The stock market today closed slightly up on all three indices. The S&P 500 is up 0.36%, NASDAQ 0.35%, and the Dow 0.23%. On the stock market map, we can see a bit of a mix where big cap tech like Apple, Microsoft, Google, Facebook, and Amazon closed up on the day, as well as the semiconductor stocks, with other pockets of green including consumer defensive, healthcare, and utilities, as well as some aerospace and defense stocks. We also have a few pockets of red including energy stocks, entertainment stocks, financials, automakers, as well as travel services. And we can see that in the breakdown of the different sectors, where utilities was leading, technology, healthcare, industrials, and communication services closing slightly up. Consumer defensive and basic materials are basically flat on the day. And leading the losers was energy, followed by real estate, consumer cyclicals, and financials. The mix between the different sectors today, guys, is typical of trading around recession fears. And there's a very good reason for that, and it's this, guys. The FOMC minutes came out today, and the Fed sees more restrictive policy as likely if inflation fails to come down. For the July meeting, we're now expecting a rate hike of 50 to 75 basis points. And now the Fed sees the possibility that an even more restrictive stance could be appropriate if elevated inflation pressures were to persist. In other words, guys, this basically means that the Fed will keep raising rates to crush inflation even if it tips us into recession. Now, this is absolutely nothing new from the Fed, guys. They've taken this more hawkish stance for quite a while now, and it's reflected in the price action of the market today. We had a bit of an indecision candle today, guys, with VIX both on the upside and the downside, but we closed overall slightly up on the day. Now, there's really nothing interesting today in the charts for the S&P 500, NASDAQ, and the Dow, so I'm going to skip right over that. And I'm going to jump right into the juicy bits, and it's this. This is the VIX. This is a daily chart of the Volatility Index, and I'd like to direct your attention right here, guys. Look at this. Look at how close we're sitting to this support line right here. We have now touched this line once, twice, 3 times, and we're very, very close to a fourth touch, either tomorrow or on Friday. And here's the huge news, guys. Every single time we've touched this support line on the VIX, we saw a move to the upside in volatility and a massive drop in the stock market. So it is absolutely now or never, guys, for the stock market to rally. We have to break below this trend line and go at least all the way back to this 200 period moving average for the stock market to continue to rally. However, if we see a touch of this support line, guys, either tomorrow or on Friday, and then we see a bounce in volatility, then it's pretty much game over for this rally, guys, and then we will continue to go down. So it's 100% now or never for the stock market. I'll just very quickly jump into a couple of charts. We have Nvidia right here. I've redrawn the channel, the downward channel, guys, to better reflect the price action, and we have a bit of a descending wedge. We had this beautiful bullish engulfing candle, and we've now seen a bit of a follow-through candle, but it's an indecision candle. If you're a bull now, the hope is for Nvidia to close near $160 this week and break out of this descending wedge by next week for a nice rally that could take us all the way up to $190 or to $200, guys. Same thing on AMD here, guys. A beautiful bullish engulfing candle on the daily chart. Now we had an indecision candle, but we closed slightly up on the day, which is good news for the bulls. We're sitting right at the bottom of this channel, so there's still plenty of upside here, guys, all the way up to the $95 level right here. And look how beautiful that would be if we just ran all the way up to the end of July. We will hit that $95 level on AMD and close this gap right here. Now let's take a look at Tesla, and then I'll have one more chart for you guys after this. We're still seeing higher lows and lower highs. Momentum is still positive on the MACD. We had a bullish engulfing candle followed by an indecision candle right here. Overall, however, guys, it is now or never for Tesla, because this looks like an absolutely massive bearish pennant, a bear flag. And in fact, a full measured move on this pennant would take us all the way down to $400. And just look at how perfectly this lines up with this cluster right here at the $400 level. We had this cluster of price action going back to the later part of 2020, and I would absolutely be eyeing this level right here for a short position. And this is the last chart I have for you today, guys, and it's seasonality. And look at it right here. We are at the beginning of July. We should see a fairly decent rally going all the way into the middle of July, a pullback, and then another rally. But I explained in a previous video why I absolutely do not believe that we will see this second leg of the rally going into the back half of July and early August. And it has to do with earnings, guys. Earnings will be crushed. Earnings estimates are very, very high. They're not realistic at all. And so going into these earnings, we will see so many stocks report disappointing numbers, disappointing forecasts. And we will see a repeat of what happened in April. We were supposed to have this rally, but we ended up with one absolutely massive crash. It was one of the worst months for the stock market. So right now, guys, I'm positioned to tactically take advantage of this move to the upside going into the middle of July, but I will be flipping back to the bearish side very, very quickly to take advantage of the move to the downside going all the way into late October, right before the election results come out. That's it, guys. This is all I have for you today, guys. Thank you so much for watching, and I'll catch you in the next one. Bye-bye.
Oh, wow.